All right, what up, investors? What up, traders? Ken here from Dyslexic Investor, and we are looking at a individual on /r/investing within Reddit, and I'm just going to read summarize the paragraph that he wrote here. It's basically saying the title is I followed Jim Cramer's advice and I'm down 400K basically in 6 months. And you're going to see a lot of holes in this story, so we'll just see what happens. Basically, he's an older investor. He rolled a lot of his 401k into a personal IRA account to get more stock exposure, direct stock exposure instead of just mutual funds and index funds. So he started to buy the past 6 months. He bought everything from BA, Bed Bath & Beyond, Carnival Cruise Line, AMD, Disney Square, Wynn Resorts, Peloton, and GE, as well as a few other small cap recommendations. I followed his advice to the T, which we'll go back to this. I bought exactly when he said to buy. Obviously, I was concerned because I knew that he hardly mentioned it could be dangerous. However, once I started to see losses in the last 6 months, and I feel it will recover. He basically took a lengthy cruise with his wife, stopped looking at the markets, and he returned and he found he was down half of his lifetime retirement. And I feel like a complete degenerate gambler who put all his life savings on red and have no idea why these people are allowed to stay on TV. He's pretty desperate and hopeless. Any suggestions what to do? I'm interested here. No cash left to buy anything. So, that's a lot here. So let's just kind of analyze. A lot of people says, don't panic. Don't panic to sell anything. It's going to be a roller coaster ride, basically. Someone said 6 months is not long term. This is the key point that came out to me. 6 months is not long term. Like, you literally bought in literally the worst downturn in the market in the last 18 months to 2 years. Were more significant than it was in 2018. And basically, he doesn't break down if he bought dollar cost averaging. So dollar cost averaging basically means, let's say BA closes at 300, I'm buying 10 shares there. Closes at 250, buying 10 shares there. Closes at 200, I'm buying 10 shares there, and so forth. Like, you set aside a portfolio size thing. So if he said he's down half, so he probably has an 800K account, so he should not put more than $15,000 to $20,000 in each stock. He has just way too much stock exposure overall if he wants to run a portfolio himself. And then a couple people saying that this guy's a troll, just trying to get those likes. This guy was actually pretty nice. This is, first off, don't lose hope. Time is the most valuable thing you got. That being said, if you have it, you can try to get back in the market with volatility. Overall, I think that this is it's a really crappy situation that this guy's in. But we're going to be looking at some of these stocks that he bought. A lot of people give him flack on, like, Bed Bath & Beyond. Like, really, dude? Like, they've basically been doing terrible since, like, Amazon just kind of came into the marketplace and just killed everything. Yes, BA took a hell of a sink depending on when you bought it. It's like got down to like 150 or something like that the other day. AMD's been doing pretty well if you bought that 6 months ago. Disney was doing pretty well, but now, again, with the sell-off and the parks closing, it's not doing great. Wynn Resorts, of course, travel stocks, not doing great. IPO company that I buy expensive bikes, yeah, sure. Cruise lines, that's probably, he probably got hit cruise lines, between the cruise line, the Carnival Cruise Line, BA, and Wynn Resorts. I haven't looked on what Peloton does, but he bought other smaller cap stocks. But it sounds like he literally put a lot of money into these individual stocks, more than the percentage he should have. Maybe putting only in 5 to 10% of allocation of his total funds. So let's say he had $1 million in his retirement account. He should only put no more than 3 to 5% in each stock. So no more than, what would that be? So no more than like 15 to 25,000. I wouldn't even do 5%. Like, that's just a little too risky if he's an older investor. was kind of being, I hate to call him a degenerate gambler, but it sounds terrible, but he bought a lot all at once within 6 months, like it's like just dropping in money into the market, and see where it goes. So let's go ahead and jump to the charts, and we're going to be looking at all the charts that this individual was buying into, and we're just going to go back to the 6-month marker and see the performance since then, and then what this guy could do. All right, let's switch. All right, so we're looking at the very first stock. So he mentioned about 5 or 6 different stocks, so we'll just be looking at it. So he mentioned Boeing. So again, this thing has just fallen out of grace and just fallen out of the sky like an airplane. No pun intended. It's been just on a tear. So if you bought that 6 months ago, so let's just do beginning of March. So we're looking back basically to like October. So if he bought in around 360, 370, he's well down nearly 50% of his position right then and there. I think that's probably one of those bigger positions he probably lost and he's really upset about. And I remember hearing Jim Cramer saying like, yeah, Boeing is not going anywhere, blah 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 blah. But this thing is, I have a feeling it's going to recover. I don't know how long it's going to take to get back up to 370 or 365 or even 400. But it's going to take some time. It's going to take some mending. But again, it's only a couple companies in the world that can make airplanes. It's Airbus and Boeing. So it's going to have to come back. And we'll just see where it goes from there. But yeah, again, crappy situation for this guy. And also, again, we're going to talk to the basically overall percentage of what he put into everything. He didn't give screenshots or anything, so he just made a complaint. So CCL, which we know this one has just been absolutely terrible. Basically, if he bought it 6 months ago, he bought it in anywhere from $50 to $46, and now he's at 14. Like, I have a feeling between that and BA, these are probably one of the bigger positions he bought into. And then we're probably going to look at Bed Bath & Beyond, and clearly it's going to be a huge downturn, just like this. So Bed Bath & Beyond, I think is BBBY? Or is it 3 B's? I can't remember. Yeah, it's 3 B's. BBBY. Alright. So if you bought that 6 months ago, he's not doing terrible in that. So he bought it around $10 or even $9, and it's at basically $7 yesterday. So maybe a 25-30% decline in that. I don't know why you would buy Bed Bath & Beyond. That's just my understanding. I think it's a market that's not going to exist much longer, because a lot of the stuff you get there, you can get at Target, Walmart, and any other store. Again, I'm not much of a shopper. I do a lot of my stuff on Amazon and things like that. So this is not my market or my company that I go to. But yeah, that being said, like, this thing doesn't look pretty. Like, on a monthly chart, we're basically way past the lows of 0809. Like, doesn't that kind of tell you where this company stands? So it's just been in a terribly downtrend, basically making an all-time low of just the other day of this week. So I wouldn't want to be in the stock at all. It's just a very terrible looking stock. And next one is actually one that we own for the portfolio, is AMD. So AMD, I love this company. I love what they do. There's great stock. So if you bought this 6 months ago, he bought that around $28, so he shouldn't. That should be up. He should be at least be up 50%. So if he had a portfolio understanding and basically giving equal weight, so buying just $20,000 of each stock, everything should be okay. I think it's still going to be down for sure on overall, but it shouldn't be down 400K or half. So it should be only down maybe 15 to 25%, not literally 50%, because I feel like it just has huge weight in BA and Carnival Cruise Line and the stocks that he probably just thought he knew more of. So AMD, Great little bounce, basically on the daily chart, bounce off the 200. That we love to see that. On the weekly chart, it did close below the 21, which we're not a fan of, but this could be a potential to kind of trade sideways. So as you can kind of see my little alerts here, I really want this to kind of trade sideways, or I want it to go, if it goes straight up, that's going to be could be a bear trap, a bull trap. Basically, everyone thinks that everything's done and over, but then it comes back down to kind of test it sometimes. This is just how the psychology of people trading and what they look at the market. Long term, monthly, again, all these stocks that we're talking about are basically long term holds, not 6 months hold like this individual is saying. It looks healthy. Again, I think we could kind of come down a little bit more because a lot of estimates need to be cut for a lot of companies due to the coronavirus slowdown and the overall economic impact of that. Then let's go to Disney, which also we own as well, and we added on the way down the last week or so, basically adding in pretty nice positions around $94 just the other day. So if he bought this 6 months ago, we're looking around 130-ish, 129-ish. He had a huge run up, and then came crashing down to basically $90, $91 and some change, and kind of bouncing hard off that. Even though the parks in California and everything had to close, the Disney's, and the parks were already in China were closed for over a month, I think. And of course, they own a cruise line as well. This could be a lot of, and Bob Iger stepped down from CEO and took a creative role. Did air quotes on that. But that being said, this thing has just been beaten up. If you look here, which I like to look on the RSI here, we basically hit the very bottom at $91 at the RSI reading on the weekly chart. So that's a weekly three-year weekly chart. So each of these candles are a week, and this has just been completely beaten up, and we were due for a major bounce there. Basically probably shook a lot of people who were investing long term out. Again, well below the 21. Looks like the 8's going to be crossing over the 21 potentially, and this could be basically an opportunity down here. So you're seeing a lot of potential. I'm going to move this up to right around this level. So around this level, you see a lot of support. So this is -16 even when I went crashing down. It didn't have Disney Plus. It was having non-stop issues with trying to get ESPN monetized and try to switch out of the cable business and try to get into the new streaming wars with Netflix and basically adapt their Hulu, buying out Hulu, and now they have a pretty major footprint within the industry and potentially earnings plentiful to come down the road. Next is Square, which I think is it's SQ. SQ, yeah. And this is a fintech stock, which we actually own PayPal for my portfolio. And again, this thing has been beaten down like everyone else. This looks like a normal common stock that in the last couple days, couple of weeks actually. It's below the 200 on the daily, which not a fan of. Basically, this is a direct link to the consumer. So a lot of the individual consumers use this as a payment method for their shops. I kind of like this more on a weekly chart. So if you pump this out, so you can really see this really tight trading range, which like this guy is don't be running to the thing and just buying 100% of it here. Just kind of buy, if you're looking to buy 100 shares of this, maybe buy 15, 20 at this level and see where it goes. It looks like it had a pretty good quarter, and we'll just see where it goes from there. So Wynn Resorts. I've never been to one of these Wynn Resorts. It sounds fantastic. There we go. Yeah, this thing has been beaten up for sure due to the overall coronavirus outbreak. So you bought in. I had a support zone here. You can kind of see that's no longer valid. So basically at $104, and now it's at $64. Basically, nearly getting a 40% haircut on that one as well. That's been absolutely terrible. Again, this is all due to the slowdown of the coronavirus and COVID-19, on people not want to go out, people are canceling their vacations. This is the sad thing is it looks absolutely terrible right now, but this stuff's gonna come back. Like, it has to come back. Wynn Resort's been around forever, a great run company. I think that we potentially could see more downside, maybe to like the $50 level. So I'm gonna actually put out a alert here at or below this level. Looks like there's some support here going forth. Again, this thing traded out down in 2009 to $7, so, and then came back literally 5 years later to $250. So yeah, anything can happen in this world. It's the stock market, and please be diligent and do a lot of your own investments, and just don't rely on someone else to help you do it. So the next one is Piton, which is a newer IPO stock. And of course, this is going to be cut because a lot of people are not going to be actually, I don't know. Maybe this could have been something where like he's like, I'm not going to the gym. I'm going to buy a Peloton, do my workouts at the house. So he bought that 6 months ago. He probably bought it at $24 and it's at $17. Yeah, that's a pretty nice haircut there too. But I think this could have a potential to come basically up back to the 200 and might be able to get out of that at that level due to the fact that it's been pretty oversold here. Again, we don't have that much data because it's a brand new company. But that being said, I feel like this stock in particular has some time to come back to like the $24 level if we haven't seen that rally coming up soon, with people probably wanting to spend money and not go to the gym. Instead of going on vacation, they might treat themselves to get a Peloton. I don't know. I'm not that kind of person. Next one and last is General Electric, GE, which actually Jim Cramer has been mentioning a lot, saying it's going to be the comeback. So again, if he bought this 6 months ago at $8 to $9, he's not down that much. So that overall position, it sounds like he had huge positions in Bed Bath & Beyond, Boeing, and a cruise line stock of Carnival Cruise Line, and it's just been completely damaging him. So that being said, if he just had the SPY and he bought that 6 months ago at $289, and now it's closed at basically $270, we can just see, come on, man. It should basically only be down 5% if you just had the S&P 500. Sounds terrible, doesn't it? That sounds absolutely terrible for him. But that's a very methodical look at. Again, we don't know many details on this investor or of what he did with his shares or how much of each stock he bought on the percentage-wise of the overall portfolio that he had. That being said, I really wish and hope for this guy to get some kind of recovery. And I think when people say I followed Jim Cramer's advice, he didn't mention in anything in this article that he followed his advice and he actually signed up for Jim Cramer's Action Alerts Plus membership thing, where he actually goes into great detail on what he buys, sells, holds, and they do webinars and town hall calls and things like that, and it goes in great detail. So if you're just following him from like the TV standpoint, literally take that with a grain of salt, because there's always another story on the flip side of things. So again, it is for entertainment purposes and to help people, but like he always says, is please do your own homework. I can just give you the idea, just don't go in full board, nilly-willy, and like, oh, this guy told me to invest. It's kind of a silly thing to say. So following Jim Cramer, depending on what time, would have been great, but if you're following Jim Cramer right now with the market down 25%, was 25%, yeah, you're gonna be in a bad spot. But that being said, guys, thank you so much for watching. This is Ken from the Desk Investor. Don't forget to like and subscribe, and I greatly appreciate it. Catch you guys on the flip side. Peace.